Thank you for joining us at XM.com for today's market comment by Harlan Bospisos. I'm Maria Pachurdiz. The US dollar extended its decline against its major peers yesterday. The greenback remains in a slide mode today as well, but the currency leading the pack now is the yen. The world's reserve currency has come under selling interest after the ISM manufacturing and non-manufacturing PMIs raised questions about the performance of the US economy, and continued its downward trajectory as, while testifying before the House Financial Services Committee, Fed Chair Powell said that if the economy evolves as projected, it will likely be appropriate to start dialing back policy restraint at some point this year. Now, dollar traders are likely to turn their gaze to tomorrow's jobs data as they try to clear the fog over when the reduction process may begin. The yen rebounded yesterday after a report said that the Bank of Japan may hint at the end of negative interest rates at its March gathering, with the currency accelerating its advance today on new hike chatter. A new report hit the wires today, saying that the Bank of Japan has approval from government officials to exit negative interest rates soon. Today, the central bank torch will be passed to the ECB. Despite the Eurozone's loss of economic momentum and the slowdown in inflation, policymakers have been repeatedly noting that it is not time to start lowering rates yet, and that acting earlier may risk refueling inflation. Therefore, with the market almost fully pricing in a first quarter point reduction in April, a message of patience from Lagarde and her colleagues could prompt market participants to scale back their ECB-related bets and thereby support the euro. On Wall Street, all three of its main indices rebounded as Powell added to hopes for rate cuts this year. Nonetheless, this doesn't mean that a strong employment report on Friday will result in a pullback if market participants lift somewhat higher their implied rate path. On the contrary, stocks could gain on signs that the U.S. economy continues to perform well. The fact that Nvidia hit a new record high yesterday suggests that there may be more AI-related future growth opportunities to be priced into the markets, which means that any future pullbacks on Wall Street are likely to stay limited and short-lived. Gold continued flying, hitting a new record high today, perhaps as it received extra support from the dollar's weakness and the retreat in Treasury yields. Thanks for watching today's market comment here at XM.com.